welcome. You are watching In Your Interest. I am Krishna Kumar. As the year 2025 draws to a close, there's been one topic that's been on the top of the minds of everybody who's wondering where to invest their money. And that topic is gold, along with it, silver. As 2025 ends, it is all about these precious metals that people are wondering whether they should keep investing more into it or not. Equity markets remaining largely flat. Gold and silver, however, delivering outstanding returns that have surprised many. Let's talk about what I'm talking about. On the 30th of December last year, gold was trading at 78,420 rupees per 10 grams. Today, exactly a year later, it's at 1,38,030 rupees. That is a 76% return in just 12 months. But gold is not even the star of this story. Guess what? It's silver. A year ago, 1 kilogram of silver cost you 80,792 rupees. Today, it's 2,58,000 rupees. That's a gain of 219%. Let that sink in for a moment. If you had put 1 lakh rupees into silver at the start of this year, you would be sitting on over 3 lakh rupees today. Compare that to the Nifty 50, which gave investors less than 10% returns over the same period. The gap is massive. And this is not just a one-year phenomenon. When you zoom out to 5 years, the story becomes even more compelling. Between December 2020 and December 2025, gold has delivered cumulative returns of 136%. Silver has given 200%. The Nifty delivered 110%, which is respectable, but clearly it falls short. When you calculate the compound annual growth rate, gold clocked 19%, silver 24%, and Nifty 14%. These are the kind of numbers that force financial advisors to rethink traditional investment portfolio models. Why have equity markets stayed muted this year? Now, several factors played a role in that. Foreign portfolio investors, or FPIs as they're called, sold heavily, pulling out over 1.5 lakh crore rupees, which put pressure on the markets. Valuations remained high, even as GDP growth slowed to around 6.5%, 6.4% to be precise. Corporate earnings faced misses and widespread downgrades as well. A flood of initial public offerings or IPOs and some tightening by the RBI, Reserve Bank of India, drained liquidity or cash from the market. Globally, a stronger US dollar, the AI-driven rally in stocks in the US, a weaker rupee, and risks from new tariffs from the US also weighed on market sentiment. Now let's understand why silver has become that breakout performer that we're talking about. Its rally goes beyond just being a safe haven. Industrial demand has been a major driver, coming in from solar panels, electric vehicles, and automotive electronics. Supply has faced deficits for the 5th straight year, keeping prices structurally supported. Silver is now seen as a key input for green energy and decarbonization efforts, alongside its traditional role in times of uncertainty as a safe haven. Silver prices have surged to a record high level so far in 2025. Despite a recent correction, silver is still up more than 150% for the year. Silver prices recently climbing to around $82.50 an ounce, or roughly 2,54,000 rupees per kilogram, and that's marking a lifetime high. One of the most important factors supporting silver prices has been China's growing influence over the global silver market. China was the world's second largest silver producer, with output of around 3,300 metric tons in 2024 last year, accounting for about 13% of global production. China's role in the silver market, though, goes far beyond just mining for silver. It plays a critical role in refining, fabrication, and downstream manufacturing of silver. Amidst global economic uncertainty and growing industrial demand for silver, China has now moved to impose restrictions on silver exports, and that has further fueled the price rally. With China's export curbs on silver set to come into effect from the 1st of January 2026, market experts are predicting another surge in prices. Meanwhile, gold's rally has different drivers and they're deeply connected to global instability again. Its strength coming from escalating geopolitical risks, tensions in the Middle East, including the Israel-Gaza situation and issues with Iran, which pushed prices higher. The ongoing Ukraine-Russia conflict saw further military developments with a limited diplomatic progress, and risks in the Taiwan Strait from the US-China trade frictions added to hedging demand. Disruptions linked to Venezuela's oil sector revived concerns about energy inflation as well. Central banks continue to buy gold aggressively. It remains the only major reserve asset immune to sanctions with no counterparty or default risk. Many see it as a hedge against currency debasement and a response to the weaponization of global finance. For investors watching this show, wondering how to approach gold, here are some common options. Gold ETFs are exchange-traded funds. They offer some high liquidity and can be traded during market hours. They are tax efficient for holdings over 3 years with long-term capital gains tax at 20% after indexation. However, they cannot be converted to physical gold and have some tracking errors due to expenses. Physical gold in bars, coins, or jewelry gives direct ownership and can be useful for gifting as well on cultural occasions. The downsides, they include high making charges on jewelry and ongoing costs for storage and insurance and such. Digital gold allows very small investments starting from just 1 rupee and trading around the clock, but it carries counterparty risks depending on the provider of that digital gold, and it faces regulatory uncertainty because there's no regulatory oversight over it. Commodity futures on exchanges like MCX provide leverage for larger positions with smaller margins. This can amplify gains but also losses significantly, with daily mark-to-market settlements that may lead to margin calls. The big questions, though, we're asking is, which is the best way then to invest in gold? Physical gold, jewelry, bars, or coins? Will the precious metals rally in gold and silver continue in the year 2026? Or have we seen the peak for the cycle? What happens if equity markets or stock markets recover? Will money flow back from gold and silver back into stocks? Let's find out. We have Rahul Gupta, CMD of PP Jewelers, now joining us. We also have Dr. Shashank Rawale, stock markets expert. We have Yogendra Kapoor, senior economist, all joining us in the broadcast. Thank you, all of you, for taking time out to be with us. I'm going to begin with you, Rahul Gupta ji. Tell us, when you see these gold prices going up, so many who hold gold at home in forms of jewelry, either passed on from previous generations or just been holding on to that jewelry and thinking, this is a good time to make the most of, that jewelry lying around and that investment and then make the most of it. But then when they go to the jeweler, when they go to a jewelry store, they face issues like everything from the making cost, the GST, etc., cutting into all these margins.
Well, in today's date, the jewelry is all hallmarked in the country.
Okay.
So it's only the transparent making charges which you lose, and which is ranging from 5% to 10% in general items, whereas it's only intricate items where it goes beyond 10%. And the purity is no more an issue.
Okay.
Since last 20 years, hallmarking system is there in India. And as regards the price, I feel still there is a lot upway which is visible. Right now, the factor which has led to the price increment in the last 4-5 months, which is shifting from the reserve currency of dollar
to
gold, is the primary reason what has transpired out, due to which all central banks are changing their forex reserve from dollars to gold.
Yeah.
So I don't see it has ended yet. Whereas in India now, with the GST being so low by government, that is only 3%. And the making and the hallmarking being compulsory, I don't see any reason why
Okay.
There is no
So
transparency in the
the
trade.
reason why I was asking this question is because, when people say, at this stage, you should hold gold in your portfolio, you should hold gold one way or the other, and then buying that piece of jewelry becomes a win-win. You get jewelry, at the same time you're making a fantastic investment as well. Can people watching this show, will you tell them saying that if you want to go buy gold, buy any jewelry that you want to? It doesn't have to be just bars and coins, and you don't have to even go out and try something like gold ETFs.
Traditionally, in India, people have been holding gold in the form of jewelry. The coins part has been very limited as compared to the total gold holding in the households. But yes, I would surely say that this is the right time to buy gold and jewelry, even for planning for marriages in next year, because there's no stopping which is visible. And at the same time, I'll always endorse that people should buy hallmark gold jewelry. They must ensure that the purity what they are buying is indicated with the laser inscription on the jewelry piece, and even the government has introduced the concept of every jewelry piece is numbered.
Okay.
So all government data is available for that. So I endorse that, and I still feel upside is visible. So people must buy in the trenches. They should not speculatively buy, but they should buy in trenches, because the prices are continuously in the cyclical mode. But end of the day, it is moving an uptrend only.
Okay, it's moving up at the end of the day. Dr. Shashank Rawale, the fact of the matter is that, this financial literacy, which is only increasing with every passing year, more and more people are investing today in mutual funds than ever before. More and more people are investing in SIPs than ever before. We're talking for them who are watching this. They've just been told, they've just gained this wisdom over the last few years, especially in the post-pandemic scenario, that, it's important that we have SIPs. It's important that a huge chunk of our investments are going into SIPs. And then comes this surprise, and the numbers really make you think, even me. I'm asking my investment advisor, is it time to park a portion of my portfolio into just gold or gold ETFs or something like that, and just move away from just a heavily mutual fund dominated portfolio? What do you think should be the strategy for the year 2026?
Yes, according to me, as we know that gold has given exponential returns in the last 1 year, but it doesn't mean that it will, in the history will keep on repeating. Yes, it may give, because my analysis say that for the next maybe 1 month or more, gold may come down a bit. Okay, and even equity market may come down a bit in a form of correction. Okay. But after that, in a whole year, if we consider in 2026, according to me, equity market should try to give some good returns, because from since October 2024 till date, equity market has not given that much of a return. So we are expecting something good. And as we see that gold and equity goes opposite, right? If the equity market is going up most of the times, not every time, but most of the times, if equity market is going up, then the gold market goes down. Gold and silver market goes down. Yeah. It's in an opposite direction, right? So according to me, even though we have seen that a lot of returns have been given by the gold, but I want to say one thing, that it's a thumb rule that if you are investing in gold, it's just a kind of hedging to the inflation, hedging to the economy or equity market, you can say, right? So in a part of hedging, it's a thumb rule that maximum 5 to 8% should get invested into gold. Yes, if people are thinking right that gold may give better returns, then you can park more, maybe say 10 or 15%, but not more than that, because whenever you are saying about the investment, we should not keep the horizon of 1 year, but it should be at least 3, 4, 5 years of horizon, because more the time you invest, better returns you give. And according to me, sir, that in equities, over the period of time, even though the broader indices, Nifty and Sensex, have not given us better returns, but those people who have proper knowledge about equities or maybe about mutual fund and SIPs, right, they can invest into, if they have proper risk potential, right, they are able to take the proper calculated risk, then they can invest into SIPs, or else they can park their money safely towards gold, because it is being seen that over the period of time, even though gold may or may not give that much of returns, but it's a kind of bit of safe investments, and over the period of time it will keep on giving you better returns, because it's directly linked with the
I was asked this question because you're talking about 1 year horizon. Even in the last 5 years, if you see, gold and silver has given better returns than the Nifty 50. Yogendra Kapoor, it is traditional wisdom in India from our grandparents and their parents' days onwards. If you have money, first you take a big chunk of it and put it in gold, and you lock it up somewhere, and then you do whatever you want to with the rest. Now I come from the south, either gold or Kanjivaram saris, which both act as it's a stuff that you can pawn for cash later if you want to. And looks like we are going back into that of this traditional wisdom that at the end of the day, gold is gold, and this time around is making sense. There's so much of uncertainty. it is that uncertainty in global markets that is driving this surge towards gold. So when you talk to the average investor, what would you tell them? Because they're like, this is what my nani told me, this is what my dadi told me, and now you have financial advisors saying this.
Right. You see, there is an old dictum when we talk of traditional wisdom.
Yeah.
I think you missed out on one thing, which is that you should not put all your eggs in one basket.
Fair enough.
So that is also a part of an old wisdom. So my point is that we need to move with caution.
Okay.
The point is that the kind of gains we have seen in 2025 with respect to gold and silver, they should not be taken as benchmarks going forward. That we should not expect the kind of gains that we have seen in this year. There are several factors which have led to this increase. And I also feel that 2026 is a year in which basically one should be very cautious in terms of, basically spreading their investment. And it's important that their investment should be divided into different assets. Yes, the investment also is a criteria where you need to see how much you can invest. It's not that, if you are seeing a sector which is going good, that you are suddenly borrowing up funds to invest in that sector, because borrowing also has itself an inherent cost. Because if the prices don't increase, then you have to understand that it's a kind of a two-edged sword where you tend to not only lose on your rate of return, you end up losing your precious savings also.
Fair enough. I was only asking the perspective of the existing investments and now rebalancing your portfolio.
Absolutely. And my point is that going forward, I would certainly believe that if we look at gold and silver, whether the kind of increase that is there, we have seen in 2025, is it sustainable? Or how do we look at 2026? Are the prices going to come down or they're going to go up? My answer is that, and my assessment, that it will certainly go up, but we should expect a reasonable return of a max of 25% over the prevailing prices. And that's the reason why I say that it's very important that one should divide their investment. The good part about India is that we are seeing that apart from urban consumption, we are also seeing the rural consumption going up. We all know that India is a consumption-based economy, and I see that both gold and silver, they are a kind of assets now where we see that specifically silver, where we see the industrial demand has gone up. And you see, when industrial demand goes up, it makes sense on the ground because we see that it reduces the cost of doing business. When we look at people investing in EV industry, solar panels, electronics. So these are things which reduce the cost of operation of the business. At the same time, for a consumer also, we see that it ends up in creating savings for them. So I think what is important is that these are things which are making sense on the ground in terms of their utilization and consumption. And that's what I would like to say.
Okay. Rahul Gupta, this again is a question again on behalf of all the people watching it. How should they go about buying gold? Because you seen especially during the Diwali and Dhanteras season, you saw that all the barrage of ads for digital gold, jewelers offering gold as low as 10 rupees and 1 rupee. But then digital gold, we all know, is not overseen by SEBI or any regulatory body, so to speak. So there's a lot of risk in buying that so-called digital gold. So the larger option seems to be either buying actual physical gold, which is gold bars, coins and jewelry, or investing in gold mutual funds, including exchange traded funds. So in that sense, people have to really make a choice. And when they make the choice saying, okay, I'm not going to invest in a mutual fund, when they are coming to buy physical gold, what do you think are the best ways of going about it?
Well, the reason for increment in gold price is the counterparty risk. The US debt is looming to a very big number, which is almost $38.5 trillion. So in such situation, if you buy gold in a format where again you are leading to a counterparty risk, as in you're buying digital gold, then your risk is on the person who's holding it for you. So I believe in present scenario, it has to be physical. Generally, I say it has to be spread out.
Not even exchange traded funds? Not even gold ETFs, would you say?
In today's date, I feel ETFs also should restrict 30-40% of the value you're investing in gold. Primarily, it should be physical. Primarily, I feel it should be.
And that physical, people can just happily go out and buy that piece of jewelry that they fancy, that they like without any fear, because that that doesn't take away from anything else.
Jewelry, all the investment you can't put in jewelry, I'm sure on that. I believe coins, bars, and the jewelry all in a mix and a right.
No,
mix.
for example, if 5 to 8% of the portfolio is in gold, or about 10%, what should be a split of that 10% when it comes to putting it in gold?
If somebody is putting 100 crores, he can't put a percentage into jewelry. That's the practical part. So it depends on the portfolio, the kind of number. It's absolute number. But I believe, yes, it's females who also invest, and every household has females. So jewelry should be a part of it.
Okay.
Till the number is a crore or 2 or 3, I believe, a percentage terms, it can be 20, 30, 40%. But when the number reaches much higher, which in these days, households are investing in bigger numbers, bigger ticket size, more than 10 crores. It has to be bullion bars only. That's a fact.
And also tell us, Rahul Gupta ji, when it comes to silver, it's not the same as when it comes to gold, because silver, moves in different ways. The price bracket is completely different, and the use case is also completely different. How do people approach, gold versus silver when they go to a jeweler?
Well, silver, you understand, physically silver can't be bought in the numbers, in the quantity as what gold can be bought. People can buy a kg gold and still keep. But silver, you can't have a crore silver lying with you. Even if the silver price is 2.5 lakhs per kg, you can't be expecting a household to hold 100 kgs of silver. So I believe silver has to be in the third party format only, those who want to invest in silver. Silver is very fluctuating in today's scenario, and I feel silver, the fundamental reason for silver going up is the demand in EV and solar, and China putting restriction on their export, the export of silver, which will be.
Yeah, but then it's also a common practice among Indian households to keep buying silver, especially on special occasions.
The value ratio is very low. Value ratio is very low.
Okay.
There are people buying silver and gold coins both, but if I buy a 10-gram gold coin in today's date, it'll cost me 1.5 lakh. Even if I buy a 100-gram silver coin, it won't cost me much. It'll be some 25,000 rupees only. So the ratio of the price is very wide. So keeping that in mind, silver you can never buy in huge quantities individually, whether in physical, whether with any storage entity. So I believe silver, and also I really feel silver is, the standard deviation in case of silver price is very high. And the reason for fundamental right now for silver price going up is the supply squeeze. It is not the central banks who are hoarding, or it's not the demand of institutional investors which is coming to silver. So I still feel silver investment should not be taken as a safe haven investment right now.
Okay.
And the gold price, I still feel central banks changing from their dollar reserves to gold still as an upside. But silver, I believe, will see a cutoff sometime into industrial consumption even, I believe.
Okay, fair enough. Dr. Shashank Rawale, I have to ask you this. When I spoke to my financial advisor about having more exposure to gold, he said, we invest in multi-asset funds, that has exposure to all asset classes, including gold, including other stocks, and etc., etc. Is that another way of going about, getting more exposure as far as your investment portfolio is concerned to gold and tap into its upside?
Yes, sir. According to me, we can give more exposure to the gold. Okay, and as I said earlier, that we can invest around. Normally we said that 5 to 8% of our portfolio should be invested into gold, but more than that, maximum up to 15% we can go to invest in gold, because over the period of time, if you see now, when you said that the broader indices,
I was asking because one way of keeping a portfolio in gold is 5 to 8% is buying physical gold. Go to Mr. Rahul Gupta's store and buy gold, and then you keep it. That is one way of keeping it. The other is gold ETFs, and the other option is that your own mutual fund portfolio will have funds which have exposure to gold among other asset classes. Do you think that is good enough, or it's important that 5 to 8% goes purely into gold, be it ETF or physical gold?
Okay, so according to me, gold ETF is much better, and if, via mutual fund, if you are investing into a gold ETF, that is much better, because according to me, gold ETF gives a lot of benefits. First of all, it's not a physical; it's an online gold, digital gold. So there, you don't need to pay the making cost. Then even you get the best purity. If they say that it's a 24 karat gold, right? So you'll get proper purity, and you'll get proper market rate, whatever the real market rate is. You don't need to pay anything extra, right? So exact rate. Even we have a lot of liquidity also if you are buying gold ETF, right? So you have proper liquidity. In one click you can buy or sell. You don't need to go to your jewelry shop and try to sell your physical gold, right? So even there is no worry of getting theft and all. So according to me, gold ETF is a very good option to invest in, and even in future also, if you want to convert that paper gold into physical gold, that is also possible, right? So you don't need to worry even if you want that physical gold. And that, as we said, as Rahul sir also, it's an Indian tradition that we wear gold, and also we can convert that gold in future. So some part of your portfolio should be in gold, and that is good enough. And in over the period of time, it will surely give you better returns. And one more thing I want to tell, that those people who are investing into markets via mutual fund or via direct equities, if they have proper knowledge, then they can give more exposure to the equities or to the mutual funds, or else gold is a separate kind of asset over the period of time. It will try to give the returns and try to beat the inflation over the period of time, maybe for the next 4, 5 or 10 years also. Because as the dollar price increases, gold also increases.
Okay. Now, I'd love to continue chatting. There's so much more to talk because so many questions in the mind of so many investors, and watching this broadcast. But I'm afraid we're completely out of time over here. But so far, what it basically, we've understood is that one way or the other, go for gold, invest in physical gold or invest in ETFs, keep a certain portion of your portfolio, 5 to 8%, max 10% in gold. That stays the same whether gold prices go up further from here or not, for that matter. But the fact of the matter is that we are looking at further surge in gold and silver prices in the year 2026, and possibly a comeback by the stock markets and consequently mutual funds as well. We'll have to wait and watch on what the year 2026 holds for us. But for now, I'm going to thank Rahul Gupta, CMD of PP Jewelers, Dr. Shashank Rawale, stock market expert, and Yogendra Kapoor, the senior economist, for taking time out to be with us here on In Your Interest. And with that, it's a wrap here from my side. Thank you so much for watching. This is Krishna Kumar signing off.
खेलता है, झूलता उछलता है, दौड़ता कभी कभी दौड़ कराता है, आगे आगे बढ़ता है इंडिया, अमूल दूध पीता है इंडिया।
Welcome to the new episode of Season 2 Malaysia.
This isn't a trail of peace. This is pressure overload. A hill built for 1,000, forced to carry lakhs.
Instead of lightening the footprint, you have allowed people to actually get into every nook and corner of the Himalayas.
Careless travel, choking hills. If we don't change now, there won't be much left to enjoy.
We need to follow the Bhutan model, regulate people who can access hills.
News9 presents Heal the Hills, continuous coverage.
This is India's #1 news network, and you're watching News9, English news